Hey there, everybody. Okay, we should be good to go. Hey there, everybody. Good afternoon, good morning, good evening, depending on where you guys are at. I hope y'all are having a good trading day so far. Hey, Lorna, thanks so much. I appreciate that. Hey, Polly, good to see ya. So for today, uh, I was going to talk about a special topic on how to kind of get started to prepare yourself for the market, or at least this is what I do in the mornings. Mine do, of course, I do have two little ones that I trade with at the home. So it is in the process of getting them ready and myself ready for market day. Hey there, the dude. Good to see ya. But let's go ahead and kind of talk about that, right? So what I like to do to prep, hey Mirza, good to see you. What I like to do to prep for the market day is there are a few different things that I want to look at. And I'm talking about specifically at the start of the week, right? Now, I know today's technically a Tuesday, but given the fact that we are having a market holiday on Monday, it's kind of like the start of our week. Hey, Jane, good to see you. And so there are a few things that I like to do to prep myself prior to market open in order to get ready for the day. One of the first things I like to do is go over all the trades that I hold in my account, right? And I'll walk through what each of those are, how they look on the charts from where they closed out on Friday, right? See how that close might affect going into the open. And then what I also like to do is look at the pre-market for those symbols. So you can find that across the internet. Certainly CNBC is an easy place to go to where you can just type in the symbol and then see where it's at trading in pre-market. Is it trading higher? Is it trading lower? And is that good for you? Is that bad for you? And so it kind of gives you an idea of where things are going to open up. For example, if I was in a bullish trade and I checked it out in pre-market and it is spiking way to the upside, then that's a good clue that I might want to go ahead and look at taking some of those profits off the table, especially if I have multiple contracts, or if it's reaching my profit targets. Sometimes, right, I might have had a lower profits target set on Friday or for the open of that trade, and then it's really gapping strongly one way or the other. And so by checking that before market open, it allows me to adjust that profit target so I can try and take advantage of that bigger move that's happening prior to the start of the day. A great example of this is actually what happened on Netflix a while ago. Now, this was a trade that we talked about, simpler, and I know some of the simpler traders got into this as well, but this is a really good example of where if you're in a trade, it's a good idea to check it pre-market so that way if you have a more conservative profit target in line and it's doing, it's outperforming what that is, that the market makers don't stick you with that smaller profit, right? Because they will. That's the annoying thing about market makers is if I had a trade set up for this, for example, so here was the trade entry. We had two bullish divergent bars off support. We had a low compression squeeze. We had recent true low signals printing, a valid bullish signal, momentum building up. So all of that looks good. And so that would have been your entry on the 17th. Um, and the next day, right, we closed that day at 339. The next day we opened at 347 and then it took off to the upside. So if you're seeing this kind of gap and that potential follow through at in the next day, but you had like a conservative profit target of let's say like $1 on your options trade, you might have gone ahead and taken that off. That way, you're able to participate more in this move and not have the market makers give you only that dollar profit and not necessarily a more favorable fill given what that option strike would be worth that far in the money if you had chosen that trade idea. And you can see the high of that day went up to 375. So if you had set a conservative target and it got called out at open, you might have not been able to participate in the rest of the move for that day. Or if it was a longer term swing trade, right, the potential follow through of the trend move up into the 450-ish range, which is currently where we tapped out at, and now we're pulling back to see if support holds. So that's one of the main things I like to do. Hey, Jane, good to see you. Whenever I am prepping for my day is take a look at what trades I hold and what they're looking like at market open, and then see if I need to make any adjustments on my closing orders or any management actions, kind of prepping myself for the start of the day. Another thing that I like to do, though, specifically at the start of the week too, is I'd like to see what kind of events are going to be released that week. And what I mean by events is the Fed talking, right? Is it something like the past week where we had Powell talking and we need to be prepared for that? Is there big data coming out like CPI? How does that data affect the market recently? So, like, for example, last year, and I'll pull this up on SPX here. Last year, we know data was one of those big market movers. CPI, whenever it came out pre-market at open, it could wildly swing the market for a huge gap move, not only at the start of the day, but then a very volatile trend move that happened for the rest of the trading day. And certainly potentially starting a trend move. And so it's good to have an idea of that and how that may or may not affect the market. So last year, like I said, CPI, like here was a CPI day. I remember that one, right? We had a strong gap to the downside, held the lows right around 3,500 as support. And then we had a huge follow through just shy of a 200-point range all the way for a bounce back up. So it's good to know what potential volatility you might be getting into if you're prepping for that news event earlier in the week. One of the strategies we actually used to use a lot of last year off of the Fed and the CPI data was a strategy I called the compound butterfly. And specifically, basically, that's a class I taught here at Simpler, and it shows different ways to combine different types and styles of butterflies for a high probability win. And specifically, last year, we would pair two debit style broken wing butterflies. And the advantage of doing that setup is you'd have one on the call side, one on the put side. And all you're looking for is volatility, right? And a move within the range that you're looking for. You don't necessarily have to be right about direction. And on some days, like here, you have the benefit of potentially taking profits on both sides of the trade due to the gap moves and the strong volatility in the daily ranges that can follow through on those kind of announcements. Now, this year, those announcements have not been as big of market moves, right? Maybe the day of, we've seen a little bit more of a spike in volatility compared to the rest of the daily ranges for the year, but it is nowhere near what it was last year, right? So it's good to know what those events are, but it's also good to know how that could weigh or not weigh on the market, right? Is it going to be a huge market move event? Or is it just good to know, okay, it's getting released at this time. We might get a little bit of intraday move, but bigger picture sort of thing, it's probably not going to affect the trend or change trend like it did last year. Now, there are definitely a few different places you can go to get that information. One of the places I go to is marketwatch.com. So there's the website. It's pretty easy too. So just I'll expand it here for a second, but you can see exactly what is going on this week. So for Monday, for example, it was a holiday, right? So we already know that. We did have some home builder confidence released data. Today we have housing starts and we have the New York president speaking at 11:40 happened. Keep in mind, these are all Eastern times for what this is set at. So if you're in the Central time zone, that would have been technically 10:45. Tomorrow we have Powell speaking to the House. So that could move markets a little. He hasn't been as much of a market mover this year as he was last year, right? Same thing with CPI. On Fed days last year, you can point out the days where Powell opened his mouth. it started to move the market, right? It's pretty easy to be able to pinpoint where that was. This year, I could probably give you a couple of the days where he talked, like around here, he spoke. But outside of that, not much of a market mover. And as you can see, we maybe had a nice daily range, but we didn't actually a trend changing move, right? It wasn't as dramatic to spark a trend to the upside, to spark a trend to the downside. It was just a mute point, if anything. Even more recently, we had a little bit of a move here, but it just stayed with the overall trend and it didn't really do too much. It wasn't as big of a follow through from what we have seen last year whenever he opened his mouth to talk. So, right, that could give us the possibility of some movement tomorrow as he speaks. But, I don't know if I would think that it's going to be a huge market mover, to like completely destroy the market or to completely uplift it to the upside, right? I think we might get some intraday moves, which might be fun for those of you who like to day trade. But outside of that, I wouldn't anticipate it being a big market event. And then, of course, we have some other Feds speaking later that day. On Thursday, we have initial jobless claims, existing home sales, right? Powell speaking now to the Senate Thursday, so that could cause some moves as well. But you guys get the idea, right? It gives you a good range of what might be happening this week. And part of the reason why I look at that, of course, is because I don't want to be caught off guard with any short-term trade I hold, right? If I hold something for this week's expiration and there are a lot of big market events happening, then it allows me the chance to go back and kind of reevaluate, is my risk in the right standpoint? Do I have too much capital risk on? Am I concerned about that to where I want to shave some of it off and protect my account? Or is there a bit more out there to where I can jump in and then take whatever move I need to, whether it maybe is adding on more risk, right? If I'm trying to play a volatile trade idea like last year, it might be that I'm actually wanting to put on a trade idea to take advantage of the volatility that could occur around the news. Or maybe I have something within the housing sector, right? Maybe I have a symbol like key homes where that could be a little bit more influenced by the housing starts and things like home prices and all of the housing data that comes out during the week, to where I might want to be a little bit more mindful about that trade versus something on Amazon or an Apple where it's not as going to be as big of a news event for that symbol there to be able to work off of. So that is also another thing that I like to do for the day. Outside of that, I also have my short watch list. So I'm sure a lot of you guys have this as well, but you might have a short-term watch list of symbols that you're keeping an eye on where they haven't quite given you the trigger to jump into an entry yet, but they are setting up. So once I go through all the trades that I hold, which I think is the most important thing to do because that's the current risk that you have out there, right? Everything else is a bit more speculative because you haven't put that capital risk out into the market. But prior to that, right, you check all the trades where you do have capital risk on the table. Then you see what news events might affect those trades that you hold. And then once you kind of get through that part of the trading morning, if you will, prior to market open, then, right, you can go to your short watch list and see, okay, are any of these things moving at open or are they pulling back, right? Versus where they are in pre-market to what they look like on the charts. Does this look like it could be a valid entry to jump into at the start of the day? And then that can kind of give you a clue of, okay, is anything on the short watch list setting up to where I want to jump into it earlier in the day rather than at the close of market, which is where I typically get into the majority of my options trades outside of intraday setups. I usually look personally at like the last hour of market for those overnight or swing trades. But every now and then, something might be setting up really nicely in the morning to where you want to take that step back, take a look. And if it is, it gives you the advantage of being able to jump in maybe at the start of the market and then play through it the rest of the day for either the intraday setup or the bigger term swing move that you're looking to hold for. And so those are usually the three steps that I like to go through. And then, of course, on top of that, you can take the chance, if you don't do this every day like I do, you can also take a look at how's your account looking overall, meaning how much money do you have in reserve in the account? How much overall money do you have invested into your trade ideas? Do you have a little bit more capital risk out there than you should? Right? Are you kind of overextending yourself to where you're making yourself a little bit uncomfortable, falling into what I call the dark side of trading, where you get a little bit more emotional about the trades that you're following through rather than being more of the Jedi mind path, being unemotional and just letting the technicals follow through how they should? Or are you pretty light on capital? Like for this week, for example, with myself, I am very light on capital. I had a few trades last week that expired. I had one that followed through this week. And I was going through my short watch list on Friday and even told the small account mentorship people, like, I think I want to stay pretty light through the holiday weekend. I rather get through that noise, right? Not put on anything like a long call that could be affected by theta decay, and see how things open on Monday. And if we're able to get a pullback move or get confirmation of support holding, then it might be a bit easier for me to jump into a trade, and also maybe a little less expensive from the capital side because I don't have theta decay eating away on a trade entry that I jumped into Friday, holding through a 3-day weekend. And instead, I can evaluate it on Tuesday and see if the setup still makes sense. And ideally, either jump in at a better strike level or at a better cost basis, right? And so you might be a little bit less invested in your account to where you can look at those new trade entries and get those set up for the day and starting off. So those are kind of the steps that I like to go through. Of course, personally for myself, in between doing that, I help juggle the kids and get them ready for the day. Ideally, get some coffee or something good to go. So that way, by the time market opens, I'm completely set up here at my computer. I already know what my trades are going to do, or ideally do at the start of the market, right? I have my charts all set up accordingly, my intraday charts to my daily charts. So that way I can take a quick look at everything and know where it's going. I'm not, fiddling around trying to get my main chart set up at market open, right? Everything's good to go. I know what events are coming up for the week or for that day, so I'm not going to be caught off guard at 9:30 if all of a sudden there's a huge spike in the tick one way or the other because some information is getting released at that time. And it gets you in a really calm space to get going. Because my whole thing is I don't want to fall into the dark side of trading, right? I don't want to be emotional. I don't want to turn into Darth Vader because usually when that happens, both from what I have seen from myself as well as what I've seen from other traders, getting to that emotional aspect is not usually a good thing, right? And it can also come from losers, but it can also come from winners, which I don't think people realize, right? When you get on a good winning streak, it's easy to think like, oh, I got this in the bag. I'll just keep investing more. Everything I'm calling out is gold. And then all of a sudden you get hit by that one losing trade. And if you're over invested because you got too cocky about things, it can end up eating up all your profits, and you don't want that. So I really like to keep as much emotion out of my trading as possible. And by setting up for the day, I'm not flustered trying to get things going. I'm not having to like triple check something because I didn't realize Netflix was bouncing up so much at the open or PayPal was falling apart at the open, right? I have a clean picture of how everything's setting up at the start of the day. I have my trading journal good to go. And so that way, once market opens, it's more of a calm event of saying, okay, I knew these were the things setting up. Here's the action that I may or may not want to take, and then I can go about my trading from there. And Gernot, absolutely not a problem. So, do you guys have any questions around that? Please let me know. I feel like it's pretty straightforward, but happy to answer any questions if you guys have any. I don't see any coming through, so I think I think I did a pretty good job of being straightforward about that. It's pretty easy to understand, I feel like. But I do think that if you don't have a morning market routine, it is a smart thing to get one going, right? If you find yourself more emotional at market open, or you're feeling flustered, or you're feeling rushed to try and check on things as the market's really starting to move, or you feel like you're missing an entry at the open and you really want to take advantage of it, it's good to have this kind of routine set up because in that way it drives all of that frustration, if you will, out of your emotions, right? Leaves all that hecticness to the side, and you can be calm and prepped for whatever the market throws at you for that trading day. So, if you don't already have a market routine, I would certainly suggest starting to prep one, whatever that may look like for you, so that way you can give yourself a better start to the trading day as you go about it. So, I hope that helps you out. So, because I don't see any questions coming in, we do have a little bit of time left. Let's just talk about the market in general. So, SPX had a gap to the downside, pulled back, started to break intraday support levels, basically stalled just shy of 43.60, ended up holding that. A few clues that this could start to stall. One, you had a bullish divergent bar when the trend is technically overall bullish still, so that usually can follow through with a higher high. If you took that setup because you have the indicator, well done. That should have allowed for a quick win this earlier today, right? You had momentum resetting, but it was starting to get close to that zero line. So we were at exhaustion levels prior. When you zoom out, you can see that momentum was at the top of the axis. So as it pulls back, that means it's resetting. And in a bullish trend like this, once it gets closer to that zero line, that's a good sign that if you're not, really breaking support levels strongly, if Bollinger Bands aren't necessarily flaring open, that's a good sign you might be starting to find the quote unquote bottom of the pullback and can start to get a bounce back up. Currently, you're starting to get a bullish signal in the compound breakout tool, so that could certainly help you out as well. Taking a look at other indexes can sometimes help out when they're trying to move an agreement. So here for NDX, for example, this is a signal I called out in the small account mentorship, but you can see here it pulled right back into the ATR trailing stop. In this case, it held that support level, so that was a good sign. Similar situation with momentum, or excuse me, with the Bollinger Bands starting to flatten out, with momentum getting that reset to the zero line, bullish signal in the compound breakout tool. You had a great divergent bar here. I was a little cautious of this just given where NDX is on the daily chart. The daily chart could certainly still use either a little bit more consolidation or a pullback. But from an intraday perspective, this was a good signal to look at playing through for the higher high. And if you did that, well done. It was basically a 100-point move up for NDX to take advantage of that bounce to the upside into resistance. You can see currently on both of these indexes, we're starting to get some consolidation within the Bollinger Bands, right? They're starting to come together. You have your 10 and your 30 starting to consolidate some. Momentum's reset. So when momentum resets, a pullback to consolidation is usually a key factor of that. That's not surprising. You actually have a low compression squeeze starting to print an NDX on the hourly chart. And so all of this is a good sign that you're getting a little bit of a breather, right? If it does continue to bounce up, I don't know if I'd play it much higher than Friday's highs, maybe just playing back into that level. If we start to stall here at our simple moving averages and we can't break above them, then that could be a good clue that we try and reverse back down to test the lows of the day or certainly these support levels here. But overall, I wouldn't be too surprised if we start to chop. One thing to point out is that this week is a holiday week. So, one of the characteristics of that is that the big boys, right, the hedge funds and stuff, they usually like to take their vacation days around the holiday weekend to kind of extend that for themselves. So you usually see lighter volume going into the holiday, so like towards the end of last week. And then you also see that lighter volume at the start of the holiday week, aka at the start of this week. Like so today and tomorrow wouldn't be too surprising to see slightly lighter volume. And then it picks back up into a more normal level by the end of the week as the rest of those hedge funds and those big players come back out of their vacations. From a bigger picture point of view, what that means is it's not too surprising to get the market to kind of chop during those holiday weeks. Usually in bullish trends, they'll chop this trend slightly higher. The only difference about what this week could present us is the fact that we had such a good run last week, right? So when I pull up SPX here again on the daily chart, we can see that we had a very nice stair step move to the upside. And so because we had such strength to the upside to where we really haven't seen a pullback into support, like our last two pullbacks that we had got close to the 10 period simple and then didn't even touch it, right? And we bounced off and then continued higher in the trend. And what I'm talking about is this little bit of consolidation here, got close to the 10, and then we started to stair step up. And then here, I believe this was the Fed day, got close to the 10 period simple, didn't quite touch it, right? And then you got a nice follow through at the higher high the next day. And so we've been on a pretty good run to the upside. Even today, the lows actually got close to the 10 and we're bouncing. So that might help with the follow through back up tomorrow. Go back up towards Friday's highs to test them potentially. This is still a bullish trend. Momentum is still bullish. And unlike the hourly chart, it still has a little bit of room to where if it wants to test the top of the axis, it can before it stalls and hits that top range of exhaustion. So if this prints a bullish divergent bar into the close, I might actually look at a bullish overnight trade to play. For those of you who aren't familiar with the divergent bar indicator, it basically gives you a good probability of following through some sort of higher high within the next 3 bars. So might be able to see that become a possibility. The thing to be mindful about, though, is we've had back-to-back divergent bars. So Friday was a bearish divergent bar. You can see that gives a good probability of following through with a lower low. That's what we saw today. So well done for anyone who did take that Friday setup. A little bit more aggressive, I'd say, of a setup. But if you did, well done, because the follow through certainly happened and we bounce back up. But when we have back-to-back divergent bars, it doesn't mean they can't follow through, but it can be an overall sign of chop. And a great example is back here. Here we had a bearish divergent bar that technically followed through with a lower low, barely, but it did. Bullish divergent bar technically followed through with that higher high. Bearish one technically had the lower low, bullish one a higher high. You can see overall, though, it was a bit of consolidation in this range. From the bigger picture point of view, we really didn't get a strong move to the upside or strong move to the downside. It just kind of chopped as SPX took a little bit of a breather here before this next leg higher. So a bullish divergent bar, though, on a holiday week where everything is overall bullish, where we've basically held support, that might help with that slight grind to the upside that I was talking about, that characteristic that you can see early on. Now, Powell may affect that, right? Just like we did the morning review earlier, Powell, we know, is speaking tomorrow and Thursday. So he might affect some of that depending on what he says to the Senate, the House and the Senate. So because of that, you might do a smaller capital risk than what you normally do, right? Be mindful of the capital. Maybe reduce that capital risk. If your normal risk per trade is $500, you might consider like 150 of capital risk, right? Something on the smaller side. That way, if it doesn't quite work out because Powell really brings the market down for whatever reason, not that I'm anticipating that, but let's just say he does, then you have a much smaller risk that you're managing. And then, of course, if the move still follows through with the way that we're looking for, great. You have something in the game. You're able to take the quick win, but without it necessarily bleeding out your account if the signal changes on you. So hope that kind of helps you out. Mac, what's on my watch list? So I have a few different symbols on my watch list. I have DDOG, FSLR, BIIB, BA, VRSK, and OMCL. Those are on my short watch list for right now of things I'm watching to see whether or not they can set up for me. They may not set up, right? It may be to where I'm watching it and it's like, this isn't really doing anything for me, so I'm just going to cut it from my watch list. But there are certainly some other symbols on there that I saw earlier this morning where it's like, ooh, if this holds up into the close, I like that for a potential entry later today. And then are my trailing stops still the same setting or changed based on the market condition? So I personally don't use trailing stops on my stuff. Not to say that you can't or that they don't work. I'm just not a big fan of stops. I feel like every time I put them on, the market makers see where that's at and then they stop me out before the symbol goes back the way that I was planning for it to go. So, from a risk standpoint, that's why a lot of the times you'll see whenever I send out a trade, I say I'm okay risking 100% of the capital. And then from there, right, I'll just play until it reaches profit targets. And if I still really like the setup, I'll look for a re-entry. Um, and then as the ATR trailing stop, yes, I don't change those settings from one market into another. So those stay the same for me as support or resistance. And right now it's printing blue dots, which means that it's acting as support. Of course. And then, yeah, Nihan, I'll check really quickly SPCE, and then I will have to jump off here. So let me pull that up. Give this a second to load. It's a little bit slow currently. I apologize about that, guys. So certainly has some nice volatility, at least compared to prior daily ranges. Now, keep in mind, if you're comparing this like Netflix, for example, on that one day, it's like $1 range, right? So you always have to know what you're looking at, know what the point move is. But we had a great follow through with a gap up here. Strong bounce when it exceeds the third deviation Bollinger Band snap like this. There is a good probability that it will either stay within that range or continue higher. You can see with today's bar, we actually got a little bit higher, but for the most part, we have stayed within Friday's trading range. It's made another third deviation Bollinger Band snap again today. So with that printing, the same scenario applies where it will either stay within this current bar's range to allow the rest of the technicals to catch up, or it will actually continue higher. And I know that sounds kind of strange, right? A lot of traders, when they see a huge move like this, they'll think, "Oh my gosh, it's got to pull back, right? You got to see some profit taking in this case and drop it back down, or it's like a third ATR move, therefore it can't keep going." But remember, guys, the market's going to do it at once. We cannot control what the market does. All we can do is look at our technicals and look at something for the best probability. And what I've noticed over the years of trading is whenever the price exceeds this level, this third deviation Bollinger Band, which is this outside blue line for those of you who don't know, it basically gives it a good probability that, I don't know, the way I look at it is a case of FOMO, right? Where anyone who wasn't long sees this move start to happen and they're like, oh my gosh, I need to get into it. And everyone who was short and sees this move happen is like, oh my gosh, I got to get out, right? And that closing of short trades as well as the piling on of bullish trades is what helps keep the bar either within this range, or in this case, because it's on the upper Bollinger Bands, right, continues to put pressure to the upside. So, and usually by the time it starts to become null and void is when the Bollinger Bands catch up with the price and bring it back within the comfort zone, which is the second deviation Bollinger Band, the inside blue line. So here's a great example of that. Here was a third deviation Bollinger Band snap. You can see the next several trading bars stayed within that range. The Bollinger Bands and the 10-period simple caught up with the price, and then the bars start to trade completely within the second deviation Bollinger Band, and that's where it gets back to its normal way of trading, which is, okay, we're at support, support held, and then you play for the run up. But when it exceeds that level, a lot of people want to try and take the opposite trade to bring it back down because they think it will instantly fall back down. And you need to be very cautious of doing that when it exceeds that third deviation Bollinger Band because it can actually keep things going. So if you are in something in space, for example, right, Virgin Galactic, then certainly don't hesitate to take profits. But if you have multiple contracts, you might leave a runner on to see if it can keep going in that direction. But that is my time today, guys. So thank you so much for joining me. I hope you guys have a great rest of your trading day and trading week. I will be on again tomorrow here in the free room for our normal Wednesday hourly session. So it's a great time to ask questions, right? It won't be so topic focused as today was, so we can really dive into charts and strategies and setups and stuff. So I look forward to talking to you then. Otherwise, may the trade be with you, my fellow Jedis, and I will talk to you again next time. Bye.